A warm welcome. Good morning on this very bright Monday morning. Today we are focusing on affordable housing in Kenya, and this is a Standard Digger classified forum where we'll be looking at what are some of the affordable options when it comes to real estate in the country. My name is Abi Agina. I'll be your host for this session, and we welcome you to take part in this discussion where you can catch us on our Facebook pages, Standard Digital, and we'll be happy to engage with you if you have any questions, if you have any comments to make. And we have a very rich panel that is going to help us shape this discussion. I'll be introducing them in a short while. We have with us this morning Lazarus Asewe, CEO Twist Blocks. Thank you for coming.
Thank you.
We are also delighted to have with us John Mwaura from Kenya Mortgage Refinance Company, KMRC, Head of Credit. Thank you, sir, for joining us.
Thank you.
And then we also have with us Joseph Kamau, Executive Director, Housing Finance Group, in charge of HFDI. He'll be telling us more about options that you can get for cheap homes. Karibu sana.
Asante sana.
Last but not least, we are happy to have John Mwaura, CEO of Finsco Africa. Thank you, sir, for joining us as well.
Thank you so much. Good morning.
Well, remember, we are streaming this event live on our Facebook pages, and we'll also be having it on KTN News as we progress with this discussion. And I'd like us to begin from a point of understanding, really, why affordable housing? Well, Kenya has a housing deficit of close to 500,000 units annually, and this saw the government take up an initiative aimed at making housing cheaper for Kenyans, and this is captured under the Affordable Housing Agenda, where the Jubilee administration under President Uhuru Kenyatta had set aside funds towards delivering cheap houses for the low-income earners. Over and above that, the country has been experiencing a boom when it comes to the construction sector. How is the real estate performing? Well, I want to begin this conversation right now. Remember to share your thoughts on the same, as well as your feedback on our Twitter handles at KTN News KE, and you can also tag me at Agina Abi. I'd like me to just give the gentlemen to give us some quick opening remarks. Let me start off with Lazarus Asewe. Just give us a perspective in terms of how is the state of real estate when you look at affordable housing?
Well, the many players within the country are really trying, especially the developers, but still it's not reached to the juncture we can say it's affordable yet, because it's quite expensive. And to us, we look at housing as a basic human need, amongst shelter, food, and clothing. So if major players and even other people join hands into this work, then it can be made even better. The government in its turn also, because it starts from the cost of materials that we are having, it starts from the taxation, it starts from accessibility to funds to make the housing structures affordable. It starts from the policies, the contracts, and how people come together to make the housing available, affordable, and also accessible.
All right.
So we are glad to have our partners here, so maybe let's hear also what they have to say.
Fantastic. And I know, Lazarus, you'll be telling us more about Twist Blocks and what you've been able to do in the real estate juncture. Yes. But let me bring in Mr. Mwaura from KMRC. A lot of Kenyans are very hopeful that they'll be able to get cheap housing. Just how cheap is cheap, and why haven't we rolled it out fully to Kenyans?
Thank you, Agina. Kenya Mortgage Refinance Company was established to bring affordability of housing in this market. And essentially, we play on the demand side of the equation, where we provide access to funding. And currently, we have funding available for this sector to enable Kenyans to take mortgages that are very well priced. And that is actually where we are playing. We are playing on the demand side to enable Kenyans access affordable credit to own their houses.
Amazing. Mr. Kamau, let's also hear from you, especially you are at the heart of this matter at Housing Finance.
Okay, thank you, moderator. Affordable housing can be defined in three elements. First is the element of cost of the units. Affordability is relative, but cost of the units, which is also the issue of land, cost of land, the materials, and also the quality of the units that we are delivering. The second item about affordable housing is also the cost of finance. This is what my friend Geoffrey has talked about the issue of affordable mortgages, and we'll talk about that in detail later. Then there is also the issue of the cost of utilizing that unit. For instance, you can develop an affordable housing in, let's say, a place like 100 kilometers away from where people are working. That unit then is no longer affordable because people are not able to access the market because of the distance. You can buy a house for $1 million, but it will cost you 30,000 to come to work in a month. So that then doesn't become an affordable housing. So an affordable housing unit is one unit that does not consume more than 30% of your income towards housing. So that is overall. Maybe some statistics and to bring home why affordable housing as an agenda is really an important agenda which will be cascaded even into the new government, is because we have the employed Kenyans are about 2.47 million Kenyans, out of which 2%, only 2% of them earn above 100,000, according to the statistics that they return their NSSF returns. That means that most of these Kenyans cannot spend more than 30,000 towards owning a home, whether it's a rent or mortgage. And that explains the informality of our neighborhoods. You find a lot of people will build houses just to accommodate people, not really decent houses. And it's then paramount that there be a supply element for that market. There is demand. The issue has been supply, and we'll talk about how we can sort out the issue of supply. But on the demand side, I think he'll talk about cost of units, which we will talk about. We talk about cost of finance, and now the services available to this affordable housing.
All right, thank you so much, Mr. Kamau. And you literally raise a very important point. When you look at demand is there, but supply is what is lacking. We'll be exploring more into this. Let me also bring in the other gentleman who has not only attracted a lot of interest, but is reshaping how real estate is being done. Mr. John Mwaura, I'd like to just get your quick opening remarks. Are we missing the mark? Are we getting it right when it comes to affordable housing?
Wow, thank you very much. Again, I think this day I want us to be very candid.
Yes.
And at least we talk the way things are supposed to be.
Exactly.
Not the way things are assumed to be.
Yes.
One thing is, when we talk about affordability, word affordability is very relative. Very relative.
Sure.
So we are talking about affordable houses. What size of a house? If I look at you like this, do you qualify for affordable house?
You tell me.
I'm asking you a question. Do you qualify for affordable house? That's the question.
I should be able to qualify.
Don't answer me, but the question is, do you qualify for affordable house? Yeah. That means, according to you, what is affordable? That's and according to someone else, like my brother there, who is doing some houses who is even as low as you can imagine. Do you qualify for his house, or you qualify for a different house? That's the first question, number one. Affordable for which house? Of what size? Sure. That is number one.
Yeah.
Number two, when you talk about affordable houses, and the government is doing quite enough and quite much, and I can see my brother here, my namesake, John Mwaura here from KMRC.
Yes.
They have money for houses. We are talking about having over 2 million housing deficit in Kenya today,
Yes.
plus over 500,000 we are creating each and every year. Kenya, we are now relatively about 50 million. So we are talking about 1% of that house, of that is the demand.
I like your question. How affordable is affordable?
Yes. They are saying KMRC is here, and I think going to ask, and I think we have to be very candid. They have money to do houses.
Yes.
And they are supported, KMRC is being supported by the government. And in fact, if you go to KMRC record, you'll find my brother here, Mr. Kamau, they are there. In fact, they have been given money. Housing finance have been given money. And housing finance, you can look at them there. They are controlling about 11% or 12% of the housing mortgages in Kenya.
Yes.
The question is, other players in the market, for them to come in, what do they need for it to become affordable? One, the issue of the RAD. Me, I'm doing a project at Tatu City, next to Tatu City there, called Riga Ridges. If you go there, you see a project called Riga Ridges. We are doing affordable housing. According to us, it's affordable because they say the rate at which we are selling is very affordable. The question is, where is the government when it comes to taxes? If you apply for those things which they call taxes or tax concessions, those rebates, first of all, kizungumukuti inaanzanga hapo. Number two, the issue of the RAD. It is not the government that is giving you the RAD. You buy the RAD. But if the RAD is here in Nairobi and another is somewhere in Kamuru, those are two different projects.
Sure.
But they are all called affordable houses. So let us first of all ask ourselves, how affordable is affordable for what unit, for what size? And we talk about affordability of the money. Yes, money is there. But who qualifies to be given that money? What are the criteria? If me as a developer, because we are doing over 4,000 houses, I want these KMRC people, first of all, to come on the ground. Come on the ground and see what you are doing. And they get out of their offices. They come on the ground. They understand this is what we are going through. For it to become affordable to us, you remove this and this to us.
Perhaps they've been on the ground, it's just that they haven't gotten to you yet. But
which ground?
Mwaura will tell us more. Let's take it back to Mr. Asewe. I'd like to hear about, we'll revisit this matter. Let's hold our thoughts. We'll come back to this matter. Mr. Asewe, a lot of innovation in the affordable housing area. Tell us more about what you do as a company. And of course, is there demand? Are you meeting the demand? How best can the country further accelerate this so that we get to a point where, in the similar case like Mwaura, there's high uptake, you finish this project, you take on another project?
Yeah, thank you so much. Our technology is called Twist Block Technology. It was founded by one architect from Germany, Munich. And his innovation was inspired by the visit of Kibera slums, where people live in the shacks, the sheet metal structures. Some are made of mud, which are not weatherproof, and also there's always so many incidences of fire. So we developed a concrete block that is fireproof. It's easy to build with, and you don't need mortar to use, and also it twists seamlessly. So this technology has made it so easy to build structures within a very short time, and also to save cost up to over 30%. There are so many people who are in the innovative sector. Like there are people who are doing plastic blocks. There are people like Makiga who are also trying to bring these people to bring these technologies to the people at the bottom of the pyramid. And these are the technologies that actually appeal to us most, because my brother here, I know the 4,000 units, not even everyone here in this hall can afford that. So we are bridging the gap from the bottom as they take it from the middle and upwards. So like I said before, if all of us as players in the housing sector come together, then we can reach to our clients at all points of needs. Yeah.
All right.
as a new technology, the main challenges we're getting is people to uptake the new concepts, and also to respond also to the previous question is about affordability. When somebody buys a land, there is need to get electrical connection, there is need for road access, there is need for water. So these are the points where our government needs now to come in. We need to get them streamline the planning sector so that where there is set out for residential units, this facility or services are availed. The road networks, like now we have the expressway, it's very easy to live on the lower sides, like in Kitengela. If you have to rush back to town, then it's quite easy. 10, 15 minutes and you're in town. So if we have access and if we have the water availed, if we have the electricity and other amenities, then it becomes very easy. And that indirectly goes back to affordability. Yeah, thank you so much.
All right, interesting. And picking off from you, I like how you're saying that you're bridging the gap from the bottom. I know it's a political season, we'll not talk about bottom up. But let me bring in Mr. Mwaura. Of course, a lot of concern, especially when it comes to how is KMRC an enabler in this conversation of affordable housing, affordable credit, and empowering investors and home buyers who are literally trying to see how best can I get into the system and own a home. It is the dream of every Kenyan to eventually have their place where they can call home. Tell us more about opportunities you see and the impact of KMRC so far, and where are the gaps?
Thank you. KMRC, when KMRC was formed, the concept was to involve the private sector. And when the government formed the institution, they invited the private sector, that is the banks and the SACCOs, so that they can become shareholders and participate in the affordable housing program. So currently, KMRC has 23 shareholders, but out of the 23, 20 are participating institutions. We call them participating institutions. Participating in the sense that they are shareholders, but also they are able to access funding from KMRC. These are the 8 banks, 1 microfinance bank, and 11 SACCOs. And my friend here seated here is actually a participating institution that they are able to access funding from KMRC. That concept enables KMRC to get to every Kenyan, because then KMRC is a wholesale institution that we are able to attract a very concessional funding from development institutions, the likes of AFDB, World Bank, and other development funders. And with that, then that money comes to KMRC at concession rate, and we're able to pass that to our institutions that are participating. Those are the 20 institutions. Then they're able to go to their customers. And these are customers who are spread across the 47 counties. So we are able to go to the mashinani. We are able to get to each and every Kenyan who requires an affordable credit to own a house, and that's how the model works. So it is a very lean model because we operate at a wholesale level, and we're able to spread our credit through the institution that we are working with. That has enabled KMRC manage the costs, because then that we don't have huge overheads to manage, and therefore we're able to pass that credit and that benefit to the Kenyans. So currently, these institutions are able to lend to each and every Kenyan, and the model was crafted alongside the affordable housing program of the government, where affordability was defined to look at houses that are priced at around 4 million and below. Because that is where the government wanted to play, because that is what we call a mortgage gap. Because when a study was done in 2018, they established 4 categories of housing needs in this market. The bottom of the pyramid is what we call social housing. And this is where the government will do slum upgrading and all that. Then after that, you move to the next category, where there'll be now a bit of social housing that will be done, And that is a like of affordable housing bid that has been done, of 4 million and below. And that is what we call the mortgage gap. There's a big mortgage gap where it was established that 72% of Kenyans would actually operate in that space. And these are space of 150,000 and Kenyans who are earning 150,000 and below. Then above that, of course, we have the up market. These are Kenyans who can comfortably go to a financial institutions like HF and be able to afford a mortgage in the conventional way. So KMRC is playing in that mortgage gap where we are looking at bringing affordability to Kenyans. These are mortgages that are currently priced at a single digit, that you can walk to the institution and get a 25-year mortgage priced at 9.5%, a maximum of 9.5%. So that is what we are looking at affordability.
Interesting. And still to stay with you, the central bank released, of course, their normal survey, which showed Kenya has not more than 30,000 mortgages as we speak. And from where you sit, tell us more about how do you intend to enable more Kenyans to access mortgage financing? At the same time, how much have you been able to disburse? What are we looking at in the next, in the new financial year? And what are the opportunities?
Thank you. In fact, the last study in 2021, there were 26,731 mortgages in the country.
Yeah.
That is a small number, looking at the population of close to 50 million. And why is that so? Is that when you look at a mortgage definition in this market, that majority of Kenyans who own houses, they own houses using other means other than a mortgage. Why is that so? I think there are barriers to mortgage entry. And barriers have been cited in different studies that have been done. One is cost of credit was a big barrier before KMRC was established. That ordinarily a Kenyan going to acquire a mortgage at 14-15%, that is variable. This is a rate that will change depending with the economy, the macroeconomy factors. Then it becomes very unpredictable for a borrower. The other factor when you look at that is the process. How do you acquire a mortgage? From the credit processing by the institutions, from the titling process, the conveyance process, and the cost associated with that. Because on average, when you're taking a mortgage, you are looking at associated costs that hit around 9 to 10% for you to acquire a mortgage. In addition to a deposit that you need to put up, because the developer will require, or the bank will require you to put in a deposit of around 10%. So when you look at that, that becomes a big hindrance, a barrier to entry. The other portion of the other issue of course is looking at the financial. There's apathy also towards mortgage financing. Why is that so? There was a mismatch between liability and asset. So for a bank that is raising funds from market that is short-term, if they are attracting short-term credit from the market and they are lending long-term, a mortgage will take 10 to 15 years to 20 years. Then it becomes an issue because then we will not be able to allocate adequate funding toward mortgage. They would rather do the short-term loans that have a high turnover and able to make more money with much less risk. So these are some of the barriers that you find in the mortgage. And of course, there's also apathy because of the historical issues that have been there, things to do with foreclosures, auctions, people losing their properties because of the processes. But a few of these things have been addressed. When it comes to the funding mismatch, KMRC has come in with a long-term fund in this market that is fixed. We're actually giving a fixed rate mortgage. If today you are to go to any of the institutions that are participating, you'll get a 20-25 years fixed rate. If they tell you it's a 7% or 8% mortgage, it is fixed for the 20 years. That gives the borrower peace of mind, because then you're able to plan your finances. and you know tomorrow you'll not be surprised by a hefty repayment because things have changed in the market. Recently, central bank has made some adjustment in the central bank rate, and of course I know that will then affect the market subsequently. So the other things is the government is also working on towards the titling process, the digitization and all that, to make it a smooth process so that you're able to acquire your mortgage within the shortest time possible.
All right.
The other things to do with the costings. We are encouraging institutions that are lending to also look at how can they lower the cost, the additional cost or the closing cost. Are there possibilities of giving customers a unified package? This is where now KMRC is looking at standardization. Are we able to standardize the mortgage process so that when you go to any of the institutions, you're able to get the same feel, the same process flow? They're able to then understand that if I start my process today, within 10, 40 days, I'll be able to acquire my mortgage. And it is seamless and unified across the market. So these are some of the initiatives that we are trying to bring to this market.
All right. And Mr. Mwaura, of course, earlier on, your namesake had raised questions about how easy is it to be onboarded into the system. He also was arguing that hamwendi kwa ground. Yeah, so okay, they would like to see you more often on their developments to interact and grow the business.
Thank you again, and I think I can just respond to that. I think it's important to understand where KMRC is coming to this equation. There are two critical aspects of affordable housing. One is demand, and the other one is supply. When it comes to demand, here we are looking at availability of credit, of funding. Mm-hmm. And critically, when you look at where KMRC comes in, is to enable that, to ensure that we have adequate funding to the end borrower. So that we create enough demand for what my colleague will supply in the market. Because that was a big aspect into this equation. The other side is that on the other side we have developers and we have financial institutions like HF who are now doing development funding. They're able to fund the developers and they're able to avail development funding, which then will ensure that there's adequate supply to meet the demand that KMRC has created in the market. So just to bring it home is that we are operating from the demand side where we'll avail affordable credit so that you are able to then have a home for your properties that you are developing. That is why you will not see us on the ground, but we have our colleague here, HF, who are on the ground because they are our partners who are doing the retail banking on behalf of KMRC.
All right. John, are you convinced?
Wait. Here there's something. There's a problem here.
We'll come to you, Mr. Kamau. Let's hear.
I know. I will support you, Kamau. There's a problem that my brother is creating, and we must get a solution today for Kenyans. They have money, and they are saying we have demand for the houses. So what is lacking are the supply. That is the houses.
Yes.
I have the houses. We are developing houses. We have the project currently going on. Rigase Regis. Very affordable project.
How much is a unit?
We are giving a 2-bedroom house at 4 million. A 60 square meter. The rad is ours. There's no government subsidies. There are no taxes, waiver, nothing. But you're selling them at 4 million. Then you have a 3-bedroom house. We are selling at 5.2 million. A 75 square meter. I'm talking about Kamite Corner, a project we are calling Regasa Regis. On that project, what we are now doing, we are now trying to work with them. Now that like the banks. But how I wish KMRC first of all come and understand our project, understand our needs, understand how we have framed that thing. Because what we are trying to encourage Kenyans to do, you understand over 86% of people living in urban and peri-urban areas, they are living in rented houses. That is the question. That is the thing number one. 86% of people living in urban and peri-urban areas are living in rented homes. What does that one tell you? That if these people are paying rent, how can we reduce that issue of paying rent to half, at least half. We reduce with at least 20 to 30%. One of the best way is their entrance of the KMRC. But now, KMRC need to come. These people who are raising money to pay them 20,000, 30,000, 40,000 shillings, I have them. They're saying, yes, I qualify for 4 years or 5 years loan from my SACCO or from my bank. But how can I qualify for 25 years or for 20 years? Because in my SACCO, I don't qualify for those. And my SACCO probably, their policy does not allow me to go to 10 years or 20 years. Now, KMRC now need to come strong and say, on this project, we will support 25 years or we support 20 years. Work with HF. Other than me remaining with the customer for the next 10 years, let the work of now the end user funding remain with the HFC.
Yeah.
Now, the money to be given by KMRC through HF. So when HF is coming to, for instance, a legacy, where Fisco Africa, we are selling the project together with our partners, Harry Homes, what you are going to tell them is, don't look at this project the way you look at others. We have already been appraised by the KMRC. They have to come together. But now the problem is, KMRC is coming, they leave everything to HF to look for us. Now HF is now taking us through the normal running procedure. Hapo ndipo shida iko.
Allah.
Shida inaingilia hapo. HF, I'm not talking about HF as a bank. I'm talking about the banks. All banks are taking us through the normal procedure. Now we want the banks, because I will go to beg Kamau. Kamau, please, look at this customer. Kamau will give them money. But they are going to give them under our own arrangement between them and us. How now can KMRC come? They understand the project. They give us a letter and they approve our project. That this project, we approve it at affordable housing. And we allow you to go to HF, go to Cooperative Bank, go to KCB or whichever the banks that you're going, take your customers there. And I can tell you today, with the entrance of pensions, that now, with the wisdom that the government is having today, like 2 years ago, the president approved that you can use 40% of your pension money to add ownership of a house. Now, the pensioners, other than someone retiring at 50, 60 years, and they go to start a house, they can have a house today. They come to our project, I give them a unit, they promise me to pay me now. Okay?
Yeah.
They promise to pay me now. So Kamau will be remaining with that customer for some times. KMRC, we are in business. Not them taking their money in treasury bills and treasury bonds. So we are telling them, the money that you are having, however, the government does not have money now because we are experiencing a lot of challenges from COVID-19, from Russia's invasion, from the war in Ukraine and Russia and all those things. So we're also having some challenges as an economy. But now, on affordable houses, I want them to come to the ground. Both of them.
All right.
To come to the ground and see what is happening.
Asante.
Because otherwise we'll keep on talking and we will never deliver it according to the way affordable housing is programmed.
Kamau and Mr. Mwaura, I'm sure you want to respond to this. And I just want to remind our audience that we are streaming this event live on our platform, on Standard Digital, as well as on Facebook. Other than that, remember, we are also putting this discussion courtesy of Digger Classified platform, where you can buy, rent land through our platform. Make sure you visit our platform and, of course, check out some of the offers that are there. But gentlemen, as we come back to this, a very heated discussion. There's a lot of pain in his situation. A developer has units ready. He's trying to sell them off. Some of the buyers are coming. They're purchasing probably cash. Others asking, do you have a long-term plan? So his ask is very simple, that you develop a model where once he finishes, he passes them to you, you guys get the buyers, he moves on to another project, if I got you right, Bwana Mwaura.
Yeah, that's what I'm talking about.
Let's hear your quick reaction, Mr. Kamau. How practical is his proposal?
I think as a HF group, we have 59 years experience in this, what he's doing today. We started with Woodley, and once we completed Woodley, we realized that the buyers did not have money. So CDC and the government formed a bank, which then started lending the mortgages, and that's how HFC as a bank was born. What my friend John here is saying is something that ourselves we have been experiencing. And we are a holistic development bank. So HFDI has been developing houses. We have developed over 18,000 houses. Buruburu, Komarok, all those are our projects, internal projects. And to address what he's saying,
yes,
there are a couple of items. Number one, there must be a harmonization of the Land Act as it is today. Today, him as a developer, we need to know that he can, like institutionalize the development program. But there are so many acts that he must comply with that before I can undertake to take over his project on completion, because there is demand, there are so many things that he needs to do in that area. To do this, I think the government should have formed what is called maybe an Affordable Housing Act. Because today, he's complaining about a lack of incentives from government, yet the government has really put into place policies around waivers on that, stamp duty exemption around first-time homeowners.
yes,
All those incentives are there, but to achieve them, you must go to very many government institutions and bring them together for them to be able to, for you to enjoy those incentives. So from where he's saying is that for us, where we sit as banks, we have fiduciary right.
responsibility.
Responsibility.
Yes.
Today, I can't come and tell you, develop units, I will take them off. And that's, I think, that's the original format that the government had hoped.
So what do we need to do to get this to work?
From an economic perspective, what the Affordable Housing Fund that the government had envisaged was going to be the game changer. The reason is that you would tax everybody, and you would have about $1 billion every year in taxes. This amount of money then would then offer partial guarantees to developers to say, if you develop these houses for this amount of money at these sizes, we will give you an off-take guarantee that within 6 months of you completing the project, we are going to take it over. Yeah?
Okay.
That doesn't exist today. So what we have then started doing with KMRC and the government through Bomayangu was people apply for houses. And today if you go to Bomayangu, there is probably over 400,000 people who are saving towards home ownership. But who knows how they look? Today it's just somebody maybe who has just gone to Bomayangu, applied. We don't know their income. We have not pre-appraised them. So there's need amongst the banks to come up, and maybe we can work with KMRC to then come up with a center or enable either Bomayangu or the banks to prevent. So we know Agina earns this amount of money, can qualify for a mortgage of this amount. Then we expose them to the developers and say, this developer is developing 2-bedroom units. Would you be interested? Because you qualify. For instance, if you look at many unsecured loans, if your salary goes through a bank for long, banks call you and tell you, by the way, you qualify for 2 million unsecured. You either take it or you don't take it. That's the same way we should do as banks. Then offer this support to the developers.
Yes.
I think that is what can bring that. The other item, I think, is we need, through the government, to incentivize home savings products. Home savings products enable us to be able to take a track record, even for people who are not salaried. You understand there are about 15 million people who are in the informal sector.
Yeah.
But how can I know that person who has a car wash can be able to save 1,000 a day? So in a month he has 30,000. So I know he can afford a loan that they can repay 30,000. Then I give him an offer letter or a pre-approval. Then he goes to his project and says, I am already pre-qualified for a loan of 4 million. Let me buy a 2-bedroom house. I think those are the major areas that we can play in. KMRC, to expect KMRC to prevent projects, I don't think that can happen. Because they are wholesale bankers. They lend to banks because that's the only way they can have capability to collect. Banks already have structures which can do that.
Yeah.
Today, if you go and give money, the way Uwezo Fund and all this were giving money, it's very hard for you to collect the money. Because the money goes, you don't have a capability of collecting, you don't have branch network, you don't have that trigger. So for us, I think KMRC, by giving us long-term money, it also gives security to borrowers. And to add to what Geoffrey Mwaura had said, if you look at the word mortgage, it came from the word mortician, because it meant that you take a loan, you die with it, a long-term loan,
yes.
a mortgage.
Interesting.
Yeah, and a lot of people then have feared mortgages. He's talking about development and lack of offtake. For us, we have worked with the 3 developers so far. From the units that we have sold in affordable housing, 70–80% of them are cash buyers or payment plan. Somebody will want to pay a deposit of 30% today, then pay the rest of a period.
Yes.
Our own selves, within our own bank, we have over 11 billion worth of deposits, people waiting for houses. They are saving towards houses. The issue for me is that there is like a lack of a realtor between the developers and the buyers. So development companies are either doing one leg of it rather than the holistic. You know, matching. Today we have a lot of the car industry. You walk into a car yard, somebody appraises you at the car yard. They know the documents that are required at the car yard, and they take you to their partner banks. So if you want to buy a car, so you walk to a yard, you identify a car, somebody gives you a form, they tell you, do you want Stanbic, NCBA, whoever, HFC, and you take the form. You fill it, and they walk around to the banks, they bring you an offer letter. Today, developers and most developers are just building, waiting that somebody will come. They just advertise. What we have done our own self is that we have provided those capabilities. For instance, if you come to us, you buy a unit, we're able to finance you 70–80%, and we appraise you on the ground. I think that is what John here then can benefit from.
Oh, yes. Interesting. I'd like us to shift focus a bit and also pick to see what our audiences are also saying on our various platforms. And as we get some feedback from them, I'd like us to take the conversation to Mr. Sewe. For those that are keenly monitoring this conversation, their biggest question is not this whole issue about what housing finance are doing or what KMRC are doing, but they want to know, how can I, if I'm a sole proprietor or an individual, how can I own a home? Are there developers who can do a cheap house for me at 3 million bob, 2 million bob? And how fast can this be done? Because that has also been a big challenge for the affordable housing agenda, where we've seen a number of units are still under construction. We've had a couple of them being coming to the system, such as Ngara, we saw Pangani, and a couple of others. There's a groundbreaking for Mavoko. And I just want to hear your perspective as well on just how do we make this a reality for more and more people?
Yeah, thank you very much, and thanks for the other commentators. The easiest way to make this affordable, and I was talking to our colleagues here, my colleagues here, about Wanjiku. Wanjiku is that person who doesn't have a standard bank account, is that person who doesn't know how to do the savings, and she makes money, maybe somebody in Kibanda, car wash as he mentioned, or a boda person. this is somebody who cannot maybe easily afford 4 million shillings, maybe in 10 years or so. And I bring this back to this good gentleman, that is there a way that they can do more civic education so that people know the importance of also keeping their money in the bank, because the first thing I know, if somebody comes to you, you want to see his cash flow before you can even give an unsecured loan. You need some form of chattels or something like that, or guarantee that your money will come back, or a steady flow of finances. So the best, our model, for instance, is that the client comes and tells us what their need is, depending on the size of the land they have. Then our blocks is very fast to build with, like a simple 2 to 3 bedroom house. We can do it just in a few weeks, like in 3 weeks. That is foundation to roofing. And depending on their financial, their available cash, that is what we synchronize it to whatever the amount they have. Yeah, and for the most important thing is that we make it viable in the end for them. Take an instance, for example, the people in the rural areas. Most of them live in semi-permanent structures, and this is what maybe usually it's something that cannot be transferred to family later on. If a house is built permanent, it's built stable with a good material, then we see it as a source of also investment in the long term, because it's a structure that can easily be transferred to the kin or something like that. So what we are doing with other partners is we are trying to work also closely with financial institutions and people who can also support these people. But in the end, we also have to come out and assist these people in terms of civic education, have your finances straight, so that even if you meet a financial partner, it is easier for them to be sure that their money is going to be safe. And I believe that's right. Yeah.
All right. I like Mr. Kamau. Do you want to chip in on that as well?
Yeah. You asked about affordable, how people can develop affordable housing. I think we need to be modular and standardize the input. For instance, in affordable housing, they have identified 69 components which go into building a unit. And in the past, what would happen, and we have all experienced this, everybody would go and do a house, and the spaces which remain are put windows and doors. Nobody knows what is a standard window, what is a standard door. They just, the size which remains, actually the fundi comes and measures at the end. So once we standardize this, then we can be able to drop the price of things, because we can have mass production. For instance, windows can be standard 1.8 meters by maybe 1.2. Then if a developer wants to buy, then they can do, if they want 2 windows combined into one, that way then somebody can be able to lower the cost of building. The second thing is the modular type of building. For instance, if you look at Inako, Umoja Inako, the reason why it's called Umoja Inako is because they got the land, then you start with the Inako, which is the sitting room, which can be one room. Then you can expand it, then you get a kitchen. Expand, you get a 1 bedroom. Expand, you get a 2 bedroom, 3 bedroom. And that's how Umoja Inako came. People started with very small modular type of building. So we need maybe to develop those kind of things, because as we agree, not everybody can have the same financing at the same time.
Yes.
But I also agree with him about the issue of the government should incentivize savings products towards homes. People should start to save early. And within, let's say, 5-6 years, you have created a track record, then you are able to be financeable. No, because today if you walk in and you sell fish, you have a lot of income, but it's always on your M-Pesa, then you buy in the morning, you sell it in the evening, then you have money. So we need to those couple of ideas can really help fast track deployment of affordable housing, even in the informal sector.
All right.
I think I want to comment on that. On this issue of...
Make it brief. We also want to hear from the other Mwaura.
Yes.
Yeah.
Oh, the okay.
Yes.
I wanted okay.
Yeah, please carry on.
Okay. Sawa. I wanted to talk about the issue he's talking about. And the issue he's talking about, other than now even the government, if this bank can also come up with a digital, they digitize their processes so well that the people who are in the informal sector, the people who are doing the business, people who, if you go to the bank statement, if you go to the banks and ask them bank statement, probably you will see there's no transaction. But if we go to their M-Pesa transaction, there is a road that you can see. So they embrace M-Pesa or those mobile banking platforms as they recognize it.
Yeah.
Because one of the biggest problem is bring us your bank statement. You don't bring. First of all, they embrace the issue of this mobile money.
Yeah.
If they do that, first of all, they'll be able to tackle that one. But now, if we be able to talk about today and we embrace the issue of rent to own, it has been used by the government for many years as a tenancy purchase scheme. A rent to own. Today, any person paying rent successfully can qualify to own a home. Any person paying rent, it does not matter how much you are paying.
So you rent.
Qualify.
We should
you
look at options.
as you own it.
Rent own.
You rent
model
as you own it. If you come, for instance, to our project, and we sit down with you and maybe I'm giving you a house of 3 million shilling, and I need you to give me only 300,000 or maybe 600,000. You go to your circle, you go to your bank, or you just get from your saving, as my brother is saying. Just take that 500,000. Come. During the time of construction, I'm not going to ask you for any other money. You have given me 20%. So during the time of construction, I'm not going to ask you for any money. But upon me finishing the house, you just get in. Start paying that house that moment, and that house become yours. When you finish to own it, or when you finish to pay the amount that we agreed, now that money, that house become yours. Now you see, the amount you are paying, you are now having your own asset. Slowly. You are capitating yourself. Slowly. Because if you go through maybe the normal mortgage program, sometimes it's not succeeding. But for it to work, because I also require money to finish the house, I require the bank. So I come with my client, and I tell these people qualify, they can pay me 20,000. The 80%, they need to be financed by you. They have been paying rent like this. Appraise them based on this. Whoever qualify. Whoever does not qualify, it's okay. But at least I want them now to go to that level now, whereby I'm able to sit here with the customer, and me as a developer, okay, and now the bank here. The bank to come and understand those people who are in the informal sector. And the informal sector, by the way, it is so big. I think they have the study, they can tell us what is the percentage of the informal sector. And that is, how much?
15 million.
Mm-hmm.
No, I'm talking about the percentage of the people. Our GDP is about 120 billion US dollars.
Yes.
Barely about 70% of that one or 80% of that one normally is from the informal sector. Check, maybe they have I don't have the statistics, but probably they can tell how much come from the informal sector. He can tell you comfortably that since independence up to now, we have barely given structured mortgages about 26,000. 26,000. He is saying HFC have sold about 18,000 houses. But you see, they have 26,000 mortgages. And he's telling you about 70% of them are coming cash. So what is the issue of the mortgage?
Mm-hmm.
And because it does not mean that people want to use their money today.
The interest rate question?
Not that necessarily about the interest rate. Yeah. Those two procedure twingine tunakuanga hapo twingi sana.
The apathy, like you were mentioning earlier.
Those two procedures.
Let's hear Mr. Mwaura first.
And actually,
I
give an indication of why. Because Kenyans have prefer to do to finance their housing using alternative credit sources. At the end of the day, they own houses. But how do they own these houses? The short-term loans that they get, the unsecured loans,
yeah,
the SACCO loans, And actually, that's why KMRC saw it good to include SACCOs, because SACCOs do a lot of incremental housing programs in this country. They actually contribute to the highest proportion of housing in this market, because everybody you touch, they have gone to a SACCO at some point, taken a loan to buy a plot and to do a development. So all those are mortgages, only that they are not in the mainstream data of mortgages. Because today, mortgages that are talking at the 26,000 are mortgages that are in the mainstream banking.
Yeah.
But what about mortgages that have been done by SACCOs? They are not in that statistics.
They are not captured.
And hopefully at some point we'll get an aggregation so that we get also we get sight of what is happening outside the banking sector.
Yes.
Because mortgages are many that are, I mean, houses, people own houses through finance, but it's not mainstream banking. Now, I want to touch on a few aspects that have been mentioned by my colleagues.
Yes.
I think there's an aspect that we also need to look at. How do we do appraise, or how do we look at alternative credit appraisal for informal sector? I think it's something that is lacking. Because my friend here has alluded to the straight line credit appraisal using the banking or the bank statistics. That does not work for the informal sector. I think it's something that we need to encourage, that we need to look at how else can we appraise these informal sector, so that, because there's income, they have cash flows. We only need to see how do we tap it and how do we develop a score for them. Rent is one of the aspects that you can use. If somebody has been paying rent for 5 years, for 2 years, it shows that actually they have a cash flow. They can maintain a credit, history over that rental. Yeah. Because that is discipline. When you look at utilities, every other day you have a bill for your phone, for your utilities, water. Yes. You know, home all internet. Those can actually be aggregated, because at the end of the day, that contributes to your credit score. So I think it's a sector that we need to develop, see how we can use alternative information to build a score for this country, so that we can give them a platform. And from a KMRC perspective, we're also very keen to see how do we develop that, because also we have an agenda to develop the market in terms of the financial literacy, and also developing other tools that our financial institution can actually use to appraise credit.
All right.
Now, coming to Boma Yangu, I think there's an aspect also we need to see how we can harness. There's a lot of data sitting in Boma Yangu. We are talking about over 400,000 customers who have expressed interest that at some point...
I'm actually one of them.
That at some point...
I have a Boma Yangu.
Yes, I desire to own a home.
Yes.
I desire to buy a house.
Yeah.
How do we then use that information, appraise, credit score that information, and put it in a form that a financial institution can actually use that, or a developer can use that to get what we call effective demand? So from a KMRC perspective, we're also looking at how do we then work with the State Department of Housing to develop a tool that is going to analyze data that is sitting in Boma Yangu and make it data that can be used by these players in the market. So there's already some work that has started on that. Okay. And we are hoping that as we progress in the new dispensation, we'll actually get some traction on that, so that we can use that data effectively to develop the market.
Awesome, fantastic. Mr. Kamau, please.
Yeah, I think one of the main issues that is affecting the home ownership market is also the cost of the difference between, they have talked about people who are paying rent. Now, today, the difference between the mortgage amount you'll pay if you take a mortgage and the rent you are paying is the opportunity cost keeping people renting houses. Today, if you go to Kilimani, for instance, and buy a 20 million house at 13%, you'll be paying around 240,000 or something per month. The same house you are living at 80,000. So you either decide I will take a mortgage and pay a premium of 160,000 for 20 years. Now people say, let me just rent. Because the premium that people are putting on houses was almost 100%. So you build a house for 8 million, you are selling it for 20 million. Then you keep out a huge portion of the market. So also, I think that standardization of taxation and stamp duty would then allow people to lower that premium, and also competition. And you see now the government has realized this, and that's the reason why they have upped the capital gains tax.
Yes.
It's because people are flipping these units at all, at a huge portion of profit.
Awesome, fantastic.
So the cost of development also needs to be really
reviewed a bit.
Yeah.
Yeah. So I know, Mwaura, you had some aspects to add on, but I want you to put them together as you give your closing thoughts, because we've come to the tail end of this discussion, gentlemen. Time really flies when you're having very good conversations. And I just want to hear from you. What is the way forward coming out of this affordable housing and property panel discussion? What would you like to see happening in the property market, especially to make that Wanjiku, to make that Njoroge or Anyango to be able to own a house at Legacy Ridges?
Thank you so much. I think as I add my remarks, I would say, from where we sit as developers, Finsco Africa and my partners, Harry Homes, we've done some projects before, and now the kind of project that we are doing is big enough at least to discuss critical issues with the government. Because when you're talking about a space that we can do over 3,000 units, the same location, it is not also as small. So we require government support, as far as we're also asking support from other quarters. And on this one, I would say like this. I would first of all urge Kenyans to look at the developers they're dealing with. Because developers, sometimes they're also destroying our economy by not being honest. There's no way you want to start a project, start with a lie. The intention is to con Kenyans. That's why we started differently. We realized the best way for Kenyans to have trust with a project, let Kenyans not have a trust with an individual, but Kenyans to have a trust in a project is when we embrace what we call escrow account. That the money that you are putting for a particular project, let it go toward escrow account. An escrow account is whereby yourself as a customer and the developer and the bank, that money is locked until either you are given your title or until you are given your house. So me as a developer, I am now able to go to my cooperative bank, or I'm going to go to HF and borrow money at a very low rate because I'm borrowing against my money. But not my money, it is customers' money. I'll put that money in an escrow account. You've seen incidences whereby that money is putting all money in one basket, but you can't touch money as a developer. You give even the people in diaspora some kind of trust that my money is safe. You put money in escrow account. Number two is whereby sometimes Kenyans are losing money in the hands of rogue developers. Not everyone, but there are some rogue developers who are there, or some rogue real estate people who are there. And I speak from where I come, from where I sit. We are even encouraging our customer, put your money in a lien account. A lien account is whereby you yourself as a customer and the bank where you bank your money, open an account there and go and tell them, I want to buy a project from Mr. Mwaura, and I want this portion of RAD, but he has not given me title. Keep this money until he brings title to me. So I'll work toward the money which I cannot touch. That's another way that Kenyans can embrace an account. Because sometimes you are giving money to people and they misuse that money. They go and do whatever they want to do with the money.
All right.
And finally is to say, I want to encourage Kenyans to embrace the issue of rent to own. If you are targeting to have a house of 4 or 5 million shillings, and you think that you can start with a house of 3 million, come to us, come to Finsco Africa, and we tell you how. Get into our Facebook page. We'll show you that you can own a house in a span of 5, 6, 7 years, 10 years down the line. The amount of money that you are paying as rent today, you use it Even if the bank is charging you 13 or 14%, not even the 9% KMRC is charging, even the 14%, the balance of 100 minus 14, the 86% is still yours. So at the end of the day, you remain with something. In the 10th year, you'll say, even if I have paid all this money and the bank has gone with this one, I have some money which this is my capital. And you'll use that money or that house, the collateral of that house, to do a business educate your children, do a business, give a business to your wife or your spouse or something like that. And lastly is to say, our government, let us not work from the offices. Just let us try to cooperate with the developers, with our financial institutions, even with the enablers like KMRC. So if KMRC and people like HF who are here and our government, starting the State Department of Housing, and as a developer, you agree, we are doing this project, what is needed, what is the role of this, what is the role of this, what is the role of this. Within 1 week or 1 month, we'll be able to say, this project is now active. Other than me now going to them, I go to KMRC, I want to go to State Department of Housing, and I still want to go to the customers. Customers come to us, and they're asking, what is the government doing? Finally to say, our government has done so well. Basically, a lot of infrastructure. And I want to say kudos to the President of the Republic of Kenya, President Uhuru Kenyatta. He's done work on infrastructure. Our PS, John Mwaura, he's done good work. Let's say we have given credit on that, but there's still more to do. Come back on the ground. We agree. How do we do it this way to succeed and to help Kenyans to own this home, and at least to make affordable housing a reality?
Thank you. I was hoping you'd talk about you as developers to also not have very high margins, but that's a story for another day.
Ours is not much. Ours is not much. By the way, we are the lowest in the market. We are the lowest. Just go to just check Ligas Legis.
All right. Thank you for that very nice closing remark. I'd like to hear from Mr. Kamau as well.
Yeah, I think I want to agree with Mr. Mwaura here that the government has really done a lot in policy development so far. It's something that people might not see in the buildings, but there is a lot of policy, and policy is actually the framework that guides our nation and ensures that there is perpetuity in what you really want to do. And so for that, they have done well. For me, I think my 3 areas that I would work on or to drive affordable housing agenda. The first one would be tax incentives on home ownership savings plans within the banking sector, so that we then give people tax breaks. For instance, if you save towards home ownership from your salary, let's say 10,000, 20,000, it should be exempt from taxation. Yeah. Or it can even be deducted from your tax. So if your tax, for instance, is 30,000, your payee, and you save 10,000 or 20,000, then the government your employer should remit, let's say 20,000, 30,000 of net off, and they can do that maybe to a maximum of 15,000 or 20,000. That then people will take money and keep it for home ownership, because yes, people are working, but after taxation, they are left with so little. Because you can imagine somebody, 30% of your salary has gone with government. Then another 30% goes with housing. Then you're left with 40% to fend for all the other things. But if you come and say up to 10,000, 15,000 of my tax, the tax that I'm contributing to government, I'm saving it towards a home. That will mean in 4 or 5 years, you should have a significant deposit to buy a house and move into your own house. The other thing is we need to kill the issue of speculation. Today the government is doing so much to build infrastructure. But then what is happening is that we have speculators going and buying the land and waiting it to appreciate. Yeah. I think the government should introduce idle land tax, because this idle land we are developing, we have spent money to take the roads, sewer, power to an area. Instead of it developing immediately, then somebody buys and keeps it for 15, 20 years. Then what happens is that the land is going up, but we are not, it's not for the purpose it was meant for, which was housing and to house the mass. So the third thing, I think, the last thing is that the government needs to put in together an Affordable Housing Act. This act then would transcend all the other policies and tax and acts that a developer needs to deal with. Today, he's doing an affordable housing project, but he has to deal with someone at Treasury for the waivers. He has to deal with somebody at the county for approvals. He has to deal with so many people. NEMA, you have to deal with so many people for you to really get the project together. So I think by putting them under one act, then would make a one-stop shop, then would be able to accelerate this agenda of affordable housing. Thank you.
Fantastic, thank you. Let's also hear your closing thoughts.
Thank you. I think there's a lot that has happened in this space, as my colleagues have said, and there's hope for the Kenyan who is looking for an affordable credit to buy a mortgage or to buy a home. KMRC has access to over 30 billion Kenya shillings that actually can be availed to the 20 institutions that I mentioned. So this is money that Kenyans can actually access to buy their homes at an interest rate within the single digit, and that is quite affordable because then you will be able to own a home that is 8 million and below at an interest rate at currently we've seen interest rate between 7 and 9.5%.
Yeah.
And it has brought in very good competition in the market that now we see SACCOs who ordinarily previously were not issuing mortgages are now playing in that space, and they're able to serve their members. So affordability is here with us. And of course, we want to see more development in this market. One of the things that we would want to see as KMRC is to have a very strong mortgage brokerage initiative in this market. Today, if you want to take insurance, you go to a broker and you don't even get to know who is your underwriter. And it is working very perfectly. Why can't we have the same in the mortgage industry, where you have brokers who will be able to aggregate information, get you the best deal, get you the best properties in the market, because they have sight of what is being developed, they have sight of what is being offered by the financial institution, and be able to run with that mortgage. Because it has worked in the developed market, where when you're taking a mortgage, you don't get to know the financial institution, but you work with a broker. I think that is something we need to see in this market. The other thing we also need to see is these incentives that the government has indicated. Stamp duty waiver for the first-time borrowers under the affordable housing. We need to see that being, brought to fruition, because currently I think there's still some work to be done, because we need to see these customers actually accessing that waiver so that we can encourage more and more people to take mortgages under affordable housing. Yeah. Alongside, of course, other development. The other thing that we also want to see that is going to cushion, offtake. What we call, the developments that are being bought, off-plan. Off-plan today is not regulated. Could we see some regulations around that so that we can protect our borrowers, protect our buyers in the market? Because I know there are some developers who have taken advantage of that situation, that lack of, regulation. If we could have that, then a developer will have sight of the effective demand. A borrower or a buyer will also have comfort that when they put their deposit on an off-plan purchase, they are protected.
Yeah.
And I think that will develop the market.
So
there is hope in this market.
All right. Mr. Sewe, you have the final word.
Yeah, thank you very much. Mine goes to the government also quite a bit. I think they've quite tried to do a remarkable job in terms of infrastructure and support to the many developers, but still, usually, as with any government, there's always much to be done. So as we head to elections, the new government, we hope they are going to develop policies that protects both the high-end income earner and the low-income earner both alike. And also, we as the developers, we need also to be truthful, as my brother said. We need also to give low margins so that at least most people can own this home, and home ownership becomes a reality. And also we need to develop the tradition of saving and also keeping our records right, so that if we move to the financial institutions, then it becomes quite easy for them to support. For us at Start Somewhere Kenya, we believe in supporting mostly because our keen focus is the low income earner at the moment, because we just started. So it is of great interest that if these people are able to afford it, then even the high-end earners can do. Thank you so much for this time.
All right, and thank you, gentlemen, for making this a very robust discussion. We hope we would have had more time, but so much to discuss, little time to cover. And this is not the end of us having such conversations. We shall definitely set up something down the line to also revisit this issue, as well as we take the conversation further. Well, we've been having that live webinar here on our Standard Digital, where we've been discussing affordable housing in Kenya, and we were looking at 3 critical areas: affordable housing options, as well as the Big 4 agenda on housing and the Boma Yangu initiative. We've also covered quite a lot on property financing, almost bringing us to some very heated discussions here. And I've been having a very interesting panel. And let's appreciate Mr. Lazarus Osewe, CEO Twistblocks. Thanks for coming and for your insights. I also want to appreciate Mr. John Mwaura, Head of Credit KMRC, and also not forgetting Mr. Joseph Kamau, Executive Director, HFDI, HF Group. Thank you, sir. And very interesting historical aspects that you brought about. Umoja, Inako, I didn't know this. Thank you for your great insight. And also, last but not least, Mr. John Mwaura, CEO, Finsco Africa. Thank you, sir, for your time. And remember, this conversation doesn't stop here. Let's keep engaging on our social media platforms. And here, of course, we hope to give you more interesting topics that will be able to help you make decisions when it comes to what is affordable housing, what do I go, who do I go to, and all of them, we had them here on this forum. I want to also say a big thank you to our strategy team, which has been leading this initiative, and we celebrate them as well. Well, on behalf of the entire crew that put this together, we say thank you, and let's keep the conversation going. I've been your host, Abi Agina, and looking forward to more engagements in the near future. At the end of that, have a lovely day and keep it locked here at Standard, where you get the whole story. Until next time, bye-bye from us and keep safe.